The world economy is facing the most serious problem of the post-war era. Economic activity, financial markets, and private sector confidence are collapsing. The latest update of the Monitoring Indices for global economic recovery, based on the most recent available data and real-time data estimates, shows the front end of this contraction and is much worse to come. Will the current regression be sharp but relatively short, with reversal of economic activity after the COVID-19 pandemic curve has been flattened? Or is the stage preparing for a deep and long-term global recession? The outcome depends on the trajectory of the pandemic, the responses of policymakers, and whether they are sufficient to control damage while rebuilding consumer and business confidence. In any case, combined public health and economic crisis reduce the chances of a speedy recovery. Demand has been destroyed. There are major disruptions in the manufacture of supply chains, and a financial crisis is developing at the same time. Unlike the 2008 and 9 crisis, which was triggered by the shortage of liquidity in the financial markets, the crisis that has now arisen includes more basic solvency problems for many firms and sectors other than finance. Another important difference is the worldwide nature of this shock. Immediately after the global financial crisis, several emerging markets such as China and India continue to achieve high growth and brought the world economy with it. This time, no economy is immune and eliminates the export-based rescue option for any country. Economic collapse increased deflationary and financial risks in developed economies. Commodity exporters were also severely affected. Commodity prices dropped down as demand evaporated, and oil prices fell further as Saudi Arabia and Russia entered the market. The United States economy has come to a virtual standstill with the closure of a large portion of the service sector. The disruption of industrial activity and the red-hot labor market, which has led to a dramatic increase in unemployment within a few weeks. The United States responded with an extraordinary set of financial and monetary incentive measures that will help immediately reduce the fallout from the crisis. Still, more targeted incentive measures are needed to mitigate the long-term damage from this economic sudden stance, especially to protect economically vulnerable households and small businesses. Faced with economic stress, even before the pandemic, Europe and Japan are likely to have significant decreases in production and increases in unemployment. France, Germany, and the UK face historical recessions as all indicators of activity and trade. In some of these countries, social safety nets that are stronger than in the United States will reduce the impact of the crisis on the most economically vulnerable. However, the path to recovery will be long and difficult. The Chinese economy seems to be restarting at least to a limited extent, despite limited monetary and fiscal policy responses to date. Significant economic indicators such as industrial production, retail sales, and fixed assets investment narrowed sharply in the first 2 months of the year. But there are signs that the contraction may have bottomed out. In some suspects, China's command economy is built to better withstand such major shocks compared to market economies. By directly supporting the government, businesses and banks, it can aggressively marry national resources beyond the boundaries of traditional macroeconomic instruments. However, the economy is not yet out of the forest. Given the weak domestic and foreign demand and the risks of a second wave of infections, especially as unemployment is rising. Other emerging market economies are heading towards a traumatic period. Many leave little room for maneuver between controlling healthcare, cramped urban population centers, and high levels of poverty, pandemics, and shifting to economic disaster. Even worse, some of these economies have to cope with the sudden stopping in capital inflows, the depreciation of currencies, and the lack of foreign demand for their exports. Others face difficult debt burdens, which are hard to finance. Indian government, which is already struggling with a sharp growth slowdown, has started to lock the economy, but it is facing both a health crisis and an economic crisis. Brazil's limited pandemic response so far may continue its economic activity in the short term. However, financial markets and currency fell, reflecting the possibility of a final crash. The economic and financial massacre beaten by a pandemic can leave deep traces on the world economy for a long time. Central banks at least keep up with the challenge. The Fed has taken extraordinary measures to strengthen United States financial markets through asset purchases and providing dollar liquidity to many foreign central banks. The ECB explained that there is no limit for our commitment to the euro when explaining large amounts of government and corporate bonds and other asset purchases. The Bank of England is ready to finance government spending directly. Even some emerging market central banks, such as the Central Bank of India, are considering quantitative expansion operations. Such measures will prevent the financial markets from freezing, but will balance the decline in consumer demand or not encourage investment. With the extension of both conventional and non-conventional monetary policy instruments to the limit, fiscal policy will need to lift further. Well-targeted financial measures can help sustain employment and demand by softening the blow on consumers and businesses, especially small and medium-sized businesses that tend to have minimal buffers. In these desperate times, this option should be used by governments facing low borrowing costs, even if they already have high levels of public debt. Low and middle income countries with inadequate health systems, where the outbreak can be disastrous, need support from the international community, including potentially concessional debt relief. The failure of national governments to come together even at such a critical time to create a common front against pandemics underlines that international cooperation is dangerously broken. This harms further business and consumer confidence, which is currently in free fall. The need for ours has been combined with aggressive steps that include honest and transparent information sharing by national leaders, a carefully calibrated strategy to restart economic activity before a very long time to limit the epidemic. Information and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.